The following is a presentation of TFNN. Live at TFNN, the Bull Bear Binary Option Hour. Brought to you by Nadex. Now, Tom O'Brien, Darrell Martin, and Steve Rhodes.
Welcome, folks, to the Nadex Bull Bear Binary Option Hour. I'm your host, Steve Rhodes, Darrell Martin, and Tom O'Brien on planes heading out to Denver, Colorado for tomorrow's workshop, Dynamic Trading Strategies, from 8:30 to 12 noon at the Marriott Tech Center. So if you are in that Denver area, you can go to the homepage of TFNN.com. It is still not too late to go ahead and sign up for it. Again, that is tomorrow, the Marriott Tech Center, 8:30 to 12, Dynamic Trading Strategies. Go to the homepage of TFNN.com for all of the information. And while they are in the air and they're moving higher, it's to the moon, Alice. We've got the Dow up 138 points right now. The composite up 26. S&P's up 13. The small cap's up about 6.5 points. So the Dow leading the charge up almost a full percentage point. You got Google up $8.60. Apple down about 2. Microsoft is up 38 cents. Intel up 12. Cisco up 14 pennies. Priceline leading the charge on dollar-wise on the way up. Today, up $11.14. Talk about things going to the moon here. Let's see, we've got King Dollar up. We've got the markets up. We've got the bonds up a bit out here. Something is going to crack. We've got gold right now. Trading up $6. It's given up its early gains today. Silver up now about 25 cents. It's given back some of its gains. We've got light sweet crude trading down 28 cents. Out at 97.22. Our calling number is always 877-927-6648. Let's start off by taking a look at the S&P Cash Index, trading out right now at 1510.56. That is just squeaking, looks like just squeaking over the highs that we were looking at from a couple trading sessions ago from January 30th, 1509.94. Has not taken out the 1.272 butterfly sell pattern that is still in place out here, even so far with this large move up. So it would have to close significantly above the 1510 level. If you say, what is that, Steve-O, to take that out? Well, if we just take a look at expansion patterns, go from the September 14th high down to the low on November 16th, you would see the 1.618 level right at about the 1555. So I would say a close at around 1520. That would do it for me, and say that that even though the market is in overbought territory, that the 1.272 butterfly will have failed, and you'll see a price move up towards that 1555. But not so fast. Do not be so fast, because there are all kinds of reversal signals that are out here, and today doing nothing more than testing resistance areas, whether it's resistance areas of bearish candles or resistance areas of patterns that are out there. So as well as with the market traveling into the overbought condition. That is on the S&P. Let's go take a look at the other indexes. We'll go take a look at the Dow. If we take a look at the Dow on a daily basis, the Dow here making a higher high. So it looks to me like this, and we know what the Dow here, coming in yesterday, a 3 drive to a top pattern. We've got a 1.272 butterfly out there. The high on the Dow out here was the candle from January 29, 13,969. Yeah, 13,969. That level has now been taken out just slightly, getting up to the 14. So it's hit the 14,000 number. 14,000.97 is the number right now, trading out at 13,987. Will it peak over and start to pull back? Be very, very careful, folks. There are all kinds of patterns out here that suggest that we will see a pullback. So, and now, what would it take in order to say, hey, forget about that pullback, forget about overbought, forget about that 3 drive to a pattern, forget about that 1.272 butterfly out here? Well, we do really the same thing. If we take a look at the, what do I want to take a look at? Let me a second here to delete these. thought I had that out there for you. I'm going to get rid of the Fibonacci numbers and put these out here for us. So let's go take a look at it. The 1.618 expansion area, that would be the next level that one would look at if these tops can be taken out with conviction, would take the Dow up to the 14,383. But as I say, not so fast. Not so fast, folks, out here. You've got too many patterns that are completing, and with the market being in this overbought condition, you want to just simply make sure that you pay attention to these patterns out here. So that's on the Dow. I would say a close well above 14,000, maybe about 14,001 would go ahead and violate the three-drive pattern, violate the butterfly pattern, and so forth. Let's go take a look at the NDX 100. Let's go see what's going on over in the NASDAQ 100 because we've had Apple was trading down just a bit ago. Well, where's the NASDAQ 100 out? Here we go. So we take a look at the NASDAQ 100 trying to get up and over the resistance area. So you could get a big signal here from the NASDAQ. Of course, we know that what we've got up here is we've got a abandoned baby top. The low of that session is 2756.59. So far getting up to 2756.46 out there. We know that there's been nothing more than a sideways move out here, a real consolidation pattern after that January 2nd level. Watch today to see if the NASDAQ 100, the NDX, can close above 2746.50. It has not been able to. It's closed just slightly above it. It did it once, which was on the trading session of January 11th out there when it closed at 2748.26. But watch to see if it is able to close above that, or if all we have really going on here is some distribution inside the NDX 100. Been in a sideways trading range for about 22 days or so. Well, since January 2nd, most certainly. Got a bearish reversal sign, as well as we've got some bullish reversal signs. So there is a real tug-of-war going on inside the NDX. Let's go take a look at the New York Stock Exchange. Let's go see what that index is doing. A good idea of the overall broad market out here as we take a look at the New York Stock Exchange on a daily chart. Oh, how about that? Is that right? Can't be right. Give me a moment. Oh, it's not. I can't. I'm going to get rid of this butterfly. So we'll just have to know that, right? Well, I can get rid of the dollar amount. Let me do this. I certainly can change this up here. Give me a second to clean this up, and we can see exactly what it's doing. New York Stock Exchange this morning getting up and tagging the 1.618 butterfly sell that it has. Now, the range here on the New York Stock Exchange is pretty easy. It's right around the level that we're at right now, 89.44 all the way up to 89.76. So I would say that when we take a look at these other markets, to have taken out those other patterns, I would really benchmark everything against the New York Stock Exchange, because there's a larger butterfly pattern that takes you back off of the March 20th high out there. That high was 83.27. The low that was put in back in June 4th low, 72.22. So the 1.68 butterfly on that takes you up to 89.76. So until the New York Stock Exchange closes well above that, you've got reversal patterns that are out here. So far, the New York Stock Exchange testing the high from the 30th of January, that high level being 89.44. It's at 89.43 right now. So I say not so fast out there. A nice move certainly early this morning. Question is whether or not it's going to be able to hold these early gains out here, or whether we begin to see a pop and a drop. But pop and a drop, usually you start to see the selling come in at the 10 o'clock time frame out here. And it sounds like somebody knew that was taking place, because instead, if we switch over to the ES Mini, we didn't see selling start at 10 a.m. We actually saw buying come in at 10 a.m. Some decent volume behind it on a 10-minute chart on the ES Mini, 106,000 contracts up there. That says that high is going to be tested. That was 1507.50 out there on the ES Mini. Let's go take a look at the ETF structure. Let's go see what we have going on out here. We'll take a look at the diamonds. Let's go ahead and put this on a daily chart out here as we take a look at the diamonds. The diamonds need to get up, and diamonds having a reversal candle really yesterday, as well as the day before. Had a little dark cloud cover candle session on January 30th. Then yesterday having this shooting star out there, big shooting star, as it made its 1.272 expansion, which was at the 139.76 level. It's trading right now at 139.65. 140.42 would be the completion of a 1 to 1.272. A to B equals CD up out there. That would set up the butterfly sell pattern. Again, you've had a couple of reversal signals inside the diamonds. Volume so far today, 1.7 million shares in 45 minutes of trading. Yesterday, 3.9 million shares. So we do have some volatility. We do have some volume in this marketplace. Let's go take a look at the other ETFs out here. Let's take a look at the small caps, the IWM. The IWM looks to be getting up over its highs out here. The IWM high that was put in was on January 28th, out at 90.23, trade at 90.20 right now. Got up over that level, got up to 90.31. Has done 10 million shares today. That volume compared to what it's been doing over the last several days of 39 million. So it's got some pretty decent volume. We'll go down into the intraday charts here in just a few moments. That the IWM is doing is traveling around that 1.272 expansion level, right around the 89.91 mark out here. We did see 1 day of bears inside the IWM. That was on the small caps. That was on January 30th, down with 39 million shares. Yesterday, up with about the same volume, 37 million shares. And we do know it's got some volume in here today. We'll be able to hold these highs or not. Let's go take a look at the we took a look at the diamonds. Let's take a look at the SPYs. Then we'll go take a look at the Qs out here. As we take a look at the SPYs also getting over the highs from 2 trading sessions ago. That was 150.94, 137 million shares on that trading session. Moved down yesterday with 108 million shares, so a little bit lighter volume on that way down. This morning, so far, having 40 million shares as it got up and over the high. Of course, if it maintains this volume, even if it closes back below the high from January 30th, would suggest that even today's high would at least be tested. Inside the SPYs, if we take a look at the A to B equals CD patterns out here, if you come off of the November 16th low all the way up to the December 19th high, back down to the December 31st level, what it is that we can see out here is the 1-to-1 completed at the 150.53 mark, and 153.47 would be its potential next move out there. That is on the SPYs. If we look at expansion patterns, we would come off of September 14th down to the low of November 16th out here, and 151.76 would be the completion of a 1.272 butterfly sell pattern. Our call-in number is 877-927-6648. Let's take a look at the commodities out here. Right now you've got gold up $9.70, trading at $16.71. Silver up 46 pennies out at $31.82. Light sweet crude. We'll go take a look at light sweet crude when we get back from this break. It is trading out at $97.24 this morning, coming down and testing that 9-period EMA that it has been walking. 877-927-6648. We'll be right back.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Darrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th and will be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com, and for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex, symbol GPL, or on the Toronto Stock Exchange, symbol GPR.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. Your host, Steve Rhodes here. Dow is up 133. S&P's up 11. And, folks, if you haven't had a chance to enter our Great Panther Silver giveaway, you still have time. We're going to be giving away all kinds of silver today. And let's go to our next winner, Bill in Littleton, Colorado. Bill, congratulations on being our next winner in our Great Panther Silver giveaway.
Oh, thanks. That's really great, I listen all the time when I can.
Oh, that's great. Well, we appreciate that. How long have you been a listener?
Oh, quite a few years, ever since you were on the radio out here at 1060 a.m.
That's really great. That's really great. Well, we appreciate you listening to us. We appreciate you entering the Great Panther Silver giveaway. Nothing like giving Tiger some silver. It's a good way to start your day, a good way to start your weekend. Are you going to be watching the Super Bowl?
Probably off and on. I've got
off and on. Do you like the commercial? Yeah. Do you like the commercials?
No, I don't watch commercials.
Oh, okay. All right. Good. And anything you'd like us to take a look at, as long as we got you on the air?
Oh man, I'm on the road right now, and I can't think what I would like to look at.
Well, that's great. Hey, look, thanks for taking the call. We appreciate that. I would rather you be focused and be safe on driving out there.
Yeah, it can be hairy out here sometimes. So
and how's the weather out there? Good?
Oh, I think it's going to be close to 50 degrees today and tomorrow.
Oh, that's
so
great.
We're not doing too bad.
That's great. Well, Bill, thanks so much for entering the contest. Glad that you are our next winner out there, and thanks so much for listening to TFNN. You have yourself a great day and a great weekend, and drive safe out there.
You too. Have a great day. Bye.
All righty, you bet. And folks, don't forget you've got still time to for tomorrow's dynamic trading strategies workshop, where you will learn how to trade the Nadex platform and talk about giving things away. Folks, there is you'll want to go. We've got Tom's newsletters. We've got Darrell's. I just lost off the top of my head. I shouldn't have done that. In any event, there's so much to actually be given away tomorrow. You want to attend this workshop if you are anywhere in the area. That is 8:30 to 12. Again, all the details on the homepage of TFNN.com. As we come back to the markets here, Dow's up 128, but let's go take a look at the light sweet crude. Right now, traded out at 97.50. Yesterday, the Bears showed up in light sweet crude. They last time they showed up was a one-day wonder, one-hit wonder, which was on January 23rd. We'll see if today is just if yesterday was a one-hit wonder as well. What light sweet crude has done, it has walked the line. It's doing that Johnny Cash walk in the 9 EMA that Basil Chapman, who will be up in the next hour, has taught each of us to be paying attention to this morning so far. That the 9-period EMA is at a price point of 96.74. Light sweet crude got down to 96.51. So far has rejected that area. Lower close today, lower than yesterday, will be the first time we will have seen 2 days where we'll have gotten a bearish, well, it'll be the first time since we would have gotten a bearish candle, and then a little bit lower close out there. Of course, walking that 9-period EMA would say a lot if what happened. Would say a lot if what happened, folks, if it closed below it. So you should go ahead and put that on your chart out there. Again, that price point right now is about 96.73, but that can change, obviously, during the day. So right now, light sweet crude still bullish, still headed towards that 100.42 range. What is up there? Nothing more than the most recent swing point, which would be the September 14th level. That high is 100.42. The low is 98.04. The low has been tested. The high has not been tested. That is on light sweet crude out there. Let's go take a look at some of these stocks here popping and dropping in the marketplace. And that would be, let's go, we got Google, Priceline. How about ceramics, CRR? That's up a nice 8% this morning. Let's see if Carbo Ceramics were out with earnings. I don't see the earnings out here, but trading ahead of earnings, I would assume. Let's go take a look at it. CRR, again, is the ticker symbol, up a nice healthy $7 or 8%. Wide price spread, it looks like, and it has some pretty decent volume. So Carbo Ceramics taking out, looks like, let's pull this back here. I take that back. Carbo Ceramics trading into the last downdraft area. So we can see that Carbo Ceramics is preparing to take on its resistance levels. Let's draw that line across the screen out here. We get back, we're going to take a look at Carbo Ceramics. Anything else that you'd like, you can give us a call at 877-927-6648. Dow's up 117 right now. S&P's up 9. Apple down $3.50. Something to think about. We'll be right back.
Just recently, on December 28th, Market Insight subscribers were advised to go along the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Darrell Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Darrell Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. Your host, Steve Rhodes, here, while Tom and Darrell are on airplanes flying out to Denver, Colorado for tomorrow's event. And, folks, we've got a tiger that could use a little bit of help. His daughter, who's a active Navy wife, mother of 3, is on her medical journey for a solution to onset brain seizures. And, the request and what we can do to help others is just simply send out white light to her. So if you could, anytime today that you see something white come into your life, just grab it with your eyes, package it up. There's no right or wrong way to do this, but package it up and send it off to her. She's in Hoover, Alabama, and we could each do something here to help somebody else out. So capture that white light. I always like to just, as I'm driving around, I see something white, visually bring it in and send it out. So we could do that and help out a tigress in the tiger family. As we take a look at the markets here, we're just simply going to switch over here to the ES Mini, the 30-minute contract out here. We've got the continuous up on the screen. And what we can see here so far, all that we've got, we don't have any reversal signals if we were taking a look at bearish reversal signals. So far, what the ES Mini has done, made that 100% move a move. That is a normal move inside any market. And what it's really doing right now is setting up a consolidation range. The bottom of the consolidation really being set up by the hammer candle, which was down at the 10:30 a.m. session on January 28th out there. It's an area that's been tested now 3 times. And so the top of it, the top of that consolidation range being the highs in the $1,506 range. Right now, the ES Mini trading at $1,504. So no real reversal signals other than just simply you've got the ES Mini on the 30-minute chart getting into the overbought territory and just trying to work its way off. Right now, really doing nothing more than just traveling sideways here. So no reversal as of yet. And as we take a look at, let's go to take a look at the U.S. dollar index. We covered this during the first hour out here. U.S. dollar index so far trading right into that neckline. We're really looking at a head and shoulder pattern, really a number of patterns out here. The head and shoulder pattern as well as the hammer low. The hammer candle on the U.S. dollar index is December 19th. That number is 79.01, trading to 79.13. So far, we have a rejection of that area. So if you were wondering about reversal signals, well, that, to the extent that directional, the U.S. dollar index simply gives you a directional signal with regard to the market. We are seeing a rejection so far of that hammer candle. The neckline also a good support area. And then a little bit further down, the horizontal black line is another support area of a bullish engulfing candle that has been tested, horizontal support that would take you really into about the 78, 75-ish range or so. U.S. dollar index this morning getting down to a low of 78.92. Peeking on gold, silver, and the commodities. If we take a look at it, really just an inside, sideways trading range so far inside gold. So gold not confirming the nice move up in the markets here this morning. Silver as well, just really an inside day. Has been just traveling sideways the last 3 trading sessions, so that's not confirming anything. If we take a look at bonds, bonds trading just slightly higher. So bonds not trading lower for sure. Right now rejecting the swing point from January 30th out here. I do believe we're going to see a move upward in bonds to test at least the descending tops line that starts out on November the 16th out there. That's what's going on inside the commodity market. A peek in on the currencies, just to see what we have going on out here in the currency market. We got that euro Japanese yen currency pair, but let's go take a look at the U.S. dollar, euro U.S. dollar currency pair. That right now trading out at 136.51. This has broken through a resistance line, broke through it really with conviction over the last couple of trading sessions. Really says the euro wants to go tag the 138.319 level. That would be the That would be the 0.6. That would be the 0.78. Apologize. That would be the 0.618 retracement of the euro U.S. dollar currency pair. If we take a look at A to B equals CD patterns out here, the A to B to C to D would take you really right up there as well. That would complete a 1-to-1, 137.913 out there. The danger, though, as we take a look at that A to B equals CD pattern, is it suggests it actually wants higher price, more likely a 140s out there. That is on the euro U.S. dollar currency pair. Let's go take a look at the U.S. dollar Japanese yen currency pair continuing its move higher. So we've got the yen, U.S. dollar yen, trading out at 92.31. If we go take a look at this thing here is trying to make a move all the way up to its highs back in May of 2010, up at the 94.97 level. If we put this on a weekly chart, let's see what the weekly chart looks like. Excuse me. Oh, I don't think I've shared this weekly chart with you folks. Certainly have my my clients, but since this popped up. So here's a chart that I'm taking a look at on the U.S. dollar Japanese yen. It's a weekly chart, and the idea is to try to find a convergence of areas where we see a number of Fibonacci, either retracements or expansions that are taking place. Now, all of these numbers are coming in off of the high. This is a weekly chart we're looking at. The high up on June 22nd, 2007, out at the 124.13 level. So all of these benchmark numbers that I would give you are coming in off of that high. They're also coming in off of the same low on the weekly chart. That's the bullish engulfing candle from the low of the week of November 4th, 2011, out at 75.55. So as we take a look at expansions of swing points, if we took a look at the expansion of swing points, in essence, from the April 8th level, that high down to the low, that's going to give you 1.618, and you're going to see this little yellow box here is really kind of this cone of silence. If we were to talk about Get Smart or something, which is really what I'm trying to do here in helping to teach you about Fibonacci expansion and retracements. Remember, it's not necessarily to the penny. It is in an area or inside a range. So you can see these red horizontal lines give you the approximate area of where the pattern would complete. You can see here that coming off of the swing point from May 14th, the 0.786 level, that's the bottom of the box, and it's over that level. If you come off of the swing point high from April 10th, 2009, down to that low. Again, we're using as the low as our benchmark number, the November 4th level. You can see also coming in right now at about a 0.618, and at the top of the box, a 0.382 retracement. That is coming in off of that June 22nd high down to 2007, all the way down to the lows of November 4th out there, the week of November 4th. So this area here is where I expect that we will see some type of reversal signal inside the U.S. dollar, Japanese yen. And you want to talk about something being overbought. Oh, my goodness. This thing is got a reading on the weekly chart of about 87 right now. So let's go take a look at the spiders. Let's go take a look at some of the sectors inside the S&P 500, and let's go see what they are doing. Let's go take a look at the industrial sector out here. That would be the XLI. As we take a look at this, you can see this has formed a approximately 1.618 butterfly pattern. It did that on a move up, a little spike high on January 24th out there, as it made a high of 40.91. So the industrial sector not really having a lot of fun here this morning, not really participating in this little market rally that we have out here. Now, the industrial sector is a small weighting inside the S&P 500. Let's go take a look at the other sectors, though. Let's take a look at the financial sector. So we got financials here breaking out this morning, breaking above the 1.618 butterfly that it had, and breaking above. I'm going to have to put this back on a weekly chart, I think. So let's do that. Let's change the time frame of the financial sector. That obviously putting juice inside the markets out here. So as we take a look at the weekly, of course, this has got a little rising price channel here that began all the way back in 2009. The bottom of this price channel seems to hold pretty darn well. If we take a look at what the weekly is doing, the weekly really getting above the swing points. The weekly says that the XLF wants to get, well, I take it back. It says it wants to actually come back into, give me a second here. I got to keep pulling this thing back. Why is this, what am I not looking at? Apologize for this little interlude here. Trying to find out what swing point this thing is coming into. This says right up here. How about this? The XLF trading inside the swing point from September. Took my breath away, folks. Trading inside the swing point from September 19, 2008. The low of that is $17.16, trading at $17.59. The high of that swing point is $24.50 out here. Let's take a look at larger term. Now, you can see also the XLF on the weekly chart here being inside or very close to that overbought territory. Each time it's up here, it has either moved sideways or pulled back. And what I mean by that, we're looking at the time periods of February 2011. We're taking a look at the time periods in March of 2012. We're taking a look at the time period here in September of 2012 as well as April of 2010. But if we do take a look at A to B equals CDs out here, it's coming off the March 6th low of $5.88. Your B point is going to be the swing point of April 6, 2010. That would say, actually, that is really where this is headed to. It's not inside there. No, it's up and over it. So that swing point there, which was a high of 1712, that had 704 million shares, and it is not over that by any stretch of the imagination with volume whatsoever. Let's go to Kathy in Cambridge, Massachusetts. Kathy, thanks for calling. Thanks for holding. How are you today?
Good, Steve. How are you today?
Good. So I haven't looked at your IYT. What's happening with your IYT this morning?
Well, I'm just looking at that that high tick this morning, I don't know if it was real, if a trade actually went off on that or not, but I did get it short at 104. I had a 104.50. I had an order in.
Yes.
So I did get it, but I just don't know if that's an actual tick way up there. Which is, if it is, that's great.
Yeah. So, I mean, I've got it on my chart as well, up at 105.53. Is that what you had?
Yep. Mm-hmm.
Yeah. If it is good, and I might be able to do it during the break. I don't know if I can do it with all the things that I've got going on the system right now. But let's assume that is a accurate trade, accurate tick up there. You'd have another, if it finished the day like today, you'd have another bearish signal out here on the transports, on the IYT. So, you were good enough to point out to us the move that was taking place a couple trading sessions ago as it moved down with 1.4 million shares. And that really set up a several-day bearish set of signals out here. This morning, candle, even though you had that nice pop-up, as you point out, if that tick is correct out there, this would, and it finished the session like this, you'd have back-to-back, kind of like back-to-back bearish reversal signals out here. And what it's doing is, what's it taking on? Let's just
again, I look at FedEx. I always go back to FedEx, and the FedEx filled the gap, the gap down
yes.
this morning, but it's not going anywhere after that. Very minimal volume.
Yeah, the thing on this on the chart, if we just took a look at the IYT just unto itself, and I'm going to draw a line across the swing point that goes back to February 6, 2012. That looks like the swing point high at 96.13 or close enough to it. In fact, 96.22 looks like it made a little bit higher high on March the 19th out there. But, gapping above it, as all the markets did on January 2nd, that's a powerful move. There's no question about it. When it's got a nice gap down there that's going to be filled, but it sure did have a nice, powerful move off of that. If we go from that swing point high to the low, let's see what it did. 106.17 is a 2.0 expansion of that level. But right now, just the message of the markets with regard to the candlestick on IYT, that's a bearish. But let's go take a look at the actual transport. So what are the transports? Did you take a look at that index?
I did.
You did,
it
okay.
Popped as well, yeah, but it didn't go anywhere.
Yeah. So if we take a look, let me pull up the trannies out here. Give me a second to pull that up. And let's see here. Where is it? Transports here. So the transports are, still, they haven't been able to take out their high. And so the transports high out here, it would have to get close above. If it closed above 58.84.55, you might be wrong on the trade.
Right.
Because that should be a resistance area, because you'd absolutely got a nice bearish engulfing candle, and so it sets up a nice support area or a resistance area for you up at the high of January 28th out there, and I think that's how I would go ahead and trade it.
Okay, I'm not seeing any reversal in the markets as a whole. I'm not I don't think the numbers this morning were great, but.
You had some numbers that came out. You had ISM rose to about 53. You had construction spending up. Of course, you could have told us that. Everyone could have told us that. Consumer sentiment was up 73.8. So, and you're absolutely right. If I take a look at the ES Mini, no reversal signals at all, other than just coming into the top of the trading range that it's in. So, hey, Kathy, have yourself a great weekend, and thanks so much for calling in.
All right, thanks.
You bet. 877-927-6648. Dow is up 133 right now. We'll be right back.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks, to the Nadex Bull Bear Binary Option Hour. And during the break, Kathy, hopefully you're still listening. I was able to go back and take a look at all the trades. The very first thing that I did, because sometimes this comes up, and the very first thing that I did was put my chart on the 1-minute time frame. That way I could go back and identify the time frame within a minute where the trades would have fired off. In this case here was 9:33. During that 1 minute, we had quite a volatility in the IYT. It had trades up at the 105.53 range all the way down to 103.61. And I see, Kathy, a number of trades that fired off. I do see the 105.53. There were about 300 shares that fired off at 9:32:31 a.m. So after the market had opened, I see a trade at 105.52. Just before that, there were 500 shares. I see a number of trades. I see 105.31 also. So another 500 shares, 105.48, 105. So So absolutely, these look like legitimate trades to me. So, Kathy, that's to answer your question. It was easier for me to do this during a breakout there. As we come back here and take a look at these markets and see what is moving, Apple here looks like moving to the downside. So let's come back and take a look at Apple. Looks like creating a little bit more applesauce this morning. And as we take a look at Apple, you can see, so here's what we can learn from this chart. Number one, Apple for the last 3 days creating 3 small-bodied candles, doji candles for a couple of trading sessions yesterday, just a little spinning top, and not even able to, you take a look at a market like this. You want to talk about weak hands out here, and Apple not even able to get back so far and test the January 24th gap down level. That was 465.73, especially coming from an oversold condition. Should have had really, quite frankly, no problem in doing that. Well, not the case. It's actually trading at the low of its trading session right now. And the Japanese would have an expression here with these doji candles that you start trading below them and it's leaves falling off the tree here. Looks like the leaves in Apple falling off the tree. Winter has not stopped inside Apple. Apple is going to make its way down and at least test the gap that is open from January 24th. That high is 425, but we know it will head down lower. That's the 395.67 level, as well as a bit lower than that in my just simply taking a look at the A to B equals CD down pattern, and that was inside Apple. As far as stocks here, moving to the downside, CORP Holdings, CHK, getting chopped this morning. Let's go take a quick peek in on this, see what this equity is doing. Why is that? Let me make sure. CKH, no wonder. You have to pull up the actual right ticker symbol. I think I was looking at Chesapeake Energy. CKH out there. So as we take a look, gapping down big time. Look at this move here. Folks, this closed last night at $91 and change, trading out right now at $71.08. So this thing has taken a big hit out here. And if we put this on a weekly chart, this again is CORP Holdings, and I do not see. Oh, it was a spinoff. Looks like a spinoff here. Looks like a spinoff. Let's not pay attention to this chart because I don't have enough information here to tell me what is actually going on. So I apologize for that. Hey, folks, stay tuned. Basil Chapman will be up next. After Basil, we go to Nico DeHaan because on Fridays, it's always about your health and your wealth. Then, not sure if Darrell Martin will be traveling between 1 and 2, but David White will be with you 2 to 3. Ken Shreve from 3 to 4. The Tom O'Brien Show from 4 to 6. Have a fantastic Friday, folks. I will look forward to seeing you Monday morning. Take care.